Oil expenses slip as recession fears rumble on. Tight deliver stems losses. Melbourne oil prices fell on Monday, paring gains from the previous consultation, as fears of a global recession weighed available on the market while supply remains tight amid decreased OPEC output, unrest in Libya and sanctions on Russia. Brent crude futures for September slipped 36 cents, or 0.3%, to $111.27 a barrel at 0300 GMT, having jumped 2.4% on Friday. U.S. West Texas Intermediate (WTI) crude futures for August delivery dropped 34 cents, or 0.3%, to $108.09 a barrel, after climbing 2.5% on Friday. The recession fears are the number one bearish factor that has capped the surge in oil expenditures. Rising prices and a plunge in client self-belief have dented the gas demand outlook, even as statistics indicates that the U.S. petroleum refinery capacity has advanced, mentioned CMC Markets analyst Tina Teng. In addition, a sturdy USD also weakens large commodity markets, together with crude fees. U.S. customer sentiment dropped to a file low in June, notwithstanding a marginal development in the outlook for inflation, as the Federal Reserve mentioned its dedication to reining in inflation became unconditional, and growing issues of hobby rate hikes. Oil supply issues nevertheless continue to be preventing steeper charge falls. Energy markets stay encumbered with unique deliver risks that makes being short a nervy experience, Commonwealth Bank Commodities analyst Tobin Gorey stated. Output from the 10 contributors of Organization of the Petroleum Exporting Countries (OPEC) in June fell 100,000 barrels in step with day (BPD) to 28.52 million barrels of oil per day, off their pledged increase of about 275,000 barrels of oil per day, a survey confirmed. Declines in Nigeria and Libya offset will increase through Saudi Arabia and other large producers, and Libya faces further supply disruption due to escalating political unrest, making the likelihood of OPEC assembly its newly extended manufacturing quotas even more not going, mentioned ANZ research analysts in a note. Libya's exports have dropped to between 365,000 barrels of oil per day and 409,000 barrels of oil per day, down about 865,000 barrels of oil per day as compared to normal levels, the National Oil Corp said closing week. In a further hit to supply, a planned strike by Norwegian oil and gas people this week may want to reduce the United States' oil and condensate output by way of 130,000 BPD. Traders can be watching out for authentic costs for August from top oil exporter Saudi Arabia for signs of how tight the market is, with refiners bracing for any other sharp increase near the record set in May. 9 refining sources surveyed by means of predicted Saudi's flagship Arab light crude authentic selling charge could upward push by approximately $2.40 a barrel from the previous month.